He's Colin Dyer, and he's chief executive of Jones Lang LaSalle, one of the world's biggest commercial property brokers. So hello to you, Colin. Thanks very much for joining us. So how do you think these attacks are going to change the business climate in Russia?
Well, I must say yesterday was a very sad day. Our people in our office, several of them were on the same metro line that was affected by the Lubyanka bomb. And people were shocked yesterday. But I think Russia is a resilient country. It's a resilient people. It's a resilient economy. And I think this will be a sort of minor setback in the path to the cyclical recovery, which is plainly underway in Moscow.
Now, you're in the real estate business, and you say that BRIC countries are going to lead the recovery. But with talk of a bubble in China, terror returning to Moscow, are these really safe places to invest?
They are. What you have to look at is the long-term picture. Every economy has cycles. Every economy is affected by short-term issues, be they terror or be they related to short-term monetary policy. But China, India, Russia and Brazil all have underlying economic growth in the high single or low double-digit levels. And that means that any company, ours included, investing in these markets with a long-term horizon, and that's important. Any company investing in these markets with a long-term horizon is bound over time to profit from the long-term growth, which is clearly apparent in each of these economies.
If you were to rate those BRIC countries, or rank them rather, in order of the best return on investment first, where would you start?
You could probably, just for ease, take the ranking of their medium-term GDP growth. So China would be ahead of India, would be ahead of Russia, and Brazil somewhere behind. But that's just in terms of the headline growth. When you factor in things like currency convertibility, transparency, underlying risk, you could take a different perspective.
How about Eastern Europe? You guys had said that you were bullish on that region as well. How come?
Well, because like Russia and India and China, we're market leaders in Eastern Europe. But led by Poland, which really has seen no recession at all. The Eastern European economies have shown good signs of picking up and recovering. And we're seeing in, for example, Warsaw, similar things to the pattern we've seen in London and more recently Paris, of transaction activity picking up, investors returning to the market, and indeed a very rapid tightening of markets so that pricing recovered through the shortage of saleable product on the market. So we feel good about Eastern Europe and Russia.
And what about poor old Dubai? Do we think investors are ever going to get their money back on those investments?
I was in Dubai on my way through to India last week. It's a very interesting situation, because if you look across the whole of the Middle East area, Dubai really has invested, and very successfully invested, in putting in place a world-class infrastructure. And if you're a bank or a company trading in that region, you're looking to establish your regional headquarters, it's a really compelling sort of story. That, coupled with the clear cooperation with Abu Dhabi, just an hour's drive away, means that that's a very powerful kind of economic access there. So we feel good about it. Clearly, short term, there are some significant debt issues. There's some significant issues of confidence and lots of development projects kind of waiting to be finished. But my feeling about Dubai is that it'll work through the current issues, work through the current debt problems, and it'll be back, again, like the BRIC economies, with a good long-term growth story. So,
Colin, you guys are long-term investors. I keep hearing that word from you, but you've got to be worried about something or somewhere. What are you worried about?
Well, we're long-term investors because we were founded in London in 1783, so we have a very long history of thinking and investing for the long term. So we take a perspective that short-term, across the world, real estate markets have cycles, and we work through those and just keep our eyes on our long-term goals, our policy of building our 160 offices around the world and building our global business lines in investment management, where we manage 40 billion of assets around the world for our clients, our global corporate solutions, and our capital markets business.
Thank you so much. Colin Dyer, Chief Executive of Jones Lang LaSalle, joining us there. Thanks so much.